buying a business. So maybe there's a place that you've seen that it's kind of struggling and you think you can do it better, and you know the owners or you get introduced to the owners, and the conversation becomes, well, how about you buy my business? Since you want to do it, I'm kind of burnt out, we're struggling. Awesome. That's a great opportunity. The purpose of this video is actually to talk about the two main ways to buy a business, because everyone just gets sort of wrapped up in the buy the business conversation, and they maybe don't realize that there is, in my view, a hard way to do it and an easy way to do it. They're both difficult. They both require a lot of legal compliance, and you'll have to have all kinds of different conversations about the inventory that you're taking over, the contracts that you're taking over, whether or not there's any liabilities that you need to know about, as far as maybe somebody sued, maybe somebody slipped and fell and sued, maybe an employee sued, maybe someone that was misclassified as a contractor and should have been an employee sued. Those types of liabilities are certainly something that should be disclosed by the seller. But there are other things, I mentioned inventory. If you're selling products, there's all kinds of inventory and orders, and depending on how they have their products, if it's drop ship or consignment, these are things that you need to know. If it's a service-based business, maybe there are certain contracts and partners and vendors that you need to be aware of. What do those relationships look like? These are all the things that go into the conversation about buying a business. But I still haven't even talked about the two types of ways to buy a business. So as you can see, it can get confusing, it can get involved. So let's break it down to the two most fundamental ways to look at buying a business. First, and in my view, the more difficult way to buy a business, is to actually buy their business entity. So their LLC, their corporation, whatever entity that business is, you're going to buy that, as well as all the inventory and all of the products and contracts and vendors and all those things that we already talked about. And that's going to be essentially an acquisition. You will be acquiring their business. You may elect to have your own LLC or corporation that actually buys their LLC or corporation. That's one way of doing it. You as an individual could buy all of the ownership that that owner or those owners have in their LLC or corporation, and then you just step into the ownership role of that company. And the reason that all these things that I talked about before, contracts, liabilities, lawsuits, inventory, are really important is that when you step into the shoes of a business owner, like I just described, you're taking all that on. You're in charge of those liabilities. You're in charge of that inventory. You're in charge of those contracts and those relationships. So it's really important to know what all of that looks like and have the full picture. We haven't even talked about their financials. What does their profit and loss look like? What's their balance sheet look like? These are things that are important to know, because you need to know what the marketplace looks like, where they are, and for what they're doing. And so when you buy their actual business, when you acquire a business, you are also then any other shareholders or owners that they have. You're now partners with them if they come along for the sale. So an acquisition of the business is really a very, very involved, and you're essentially taking everything on. And the reason that I say acquisition is a little bit more difficult is that there are certain laws and regulations related to how you can buy ownership, how people can sell ownership. And so you hear mergers and acquisitions all the time for huge companies, but those rules and those laws are largely applicable to when you acquire a business, even if it's a small private business. So there are some restrictions on when people can sell ownership. There are different valuation questions that you have to ask about that ownership that you're buying. And depending on all of those factors, sometimes there are tax consequences for that acquisition, depending on your own personal tax situation, their tax situation, the business's tax situation. So that's an acquisition. Let's talk a little bit about an asset purchase, which is my recommendation always for purchasing a business, because an asset purchase, all these things we've talked about, inventory, contracts, liabilities, the furniture, the actual equipment in the business, the lease for the space that the business is in, those are all assets. So when you do an asset purchase, you're not buying their corporation, you're not buying their LLC, which means that you're not buying all their partners, you're not buying the liabilities that may have come along with people that have sued that company. The person that slipped and fell, or that employee that was misclassified, they sued that company and those owners. So if you buy all the assets, you're not getting wrapped up into all that liability that they had themselves in. You're just buying all of the tangible assets, some intangible like the lease. Maybe you'll buy trademarks or those contracts with the vendors and the partners. Those are intangible, but they're assets. They're worth something. And so when you do an asset purchase, you're purchasing all of the assets, and it's a little bit more straightforward because you just need a valuation of the assets. Inventory should have a sticker price, and the lease has some numbers in it, and you base the purchase of the lease off of that. You may or may not pay them to take on the lease because the lease is something that's an obligation. So usually they just assign the lease over and you purchase the goodwill, the customer base. Sometimes you will actually purchase the customer list and the data like that. And then again, furniture, inventory, contracts, assets, an asset purchase. The beauty of that is that you're not dealing with any of that merger acquisition stuff, and that might mean that the taxes are only sales tax for tangible goods instead of perhaps capital gains tax if you acquire a business and purchase ownership. So again, asset purchase, in my view, the easier one. It's just a sale of goods. It's a sale of assets. And so there's typically only going to be sales tax, and it's a little bit more straightforward of a transaction versus a merger or an acquisition, typically an acquisition of the company and all of the assets and inventory and contracts. So you can see where there's more that you're purchasing there, and you're purchasing a company. So it's a little bit more difficult, a little bit more compliance heavy. And so hopefully this helps clarify when you get into those conversations about buying someone's business, you really want to narrow down which one you're talking about. And then from there, you want to create a term sheet or a deal memo that talks about all of the things you're buying, what the prices that you've assigned those are, if there's going to be an escrow where you put everything into an escrow, and then once the money is paid, everything comes out of the escrow and you own it. You'll need to talk about what the lease transfer looks like, get in touch with that landlord or the broker. A lot of things go into the purchase of a business, but in my view, if you go with an asset purchase, it's a little bit less that you have to do and a little bit easier for that business purchase. So, hope this was helpful. Talk to you soon. Have a great day.